all the top headlines that we're tracking this afternoon. But first up, let's take a look at what the market is doing at this point in time. And yes, we have dipped quite a bit. In fact, 0.5% lower as we speak, and we are below the 24,100 mark. Nifty Bank should come up for you on your screens because we are seeing massive selling within the banking and financial services stocks, because that index is now down 700 points in trade today. So clearly, it's a complete carnage, especially for the banking and financial services index. The Nifty mid-cap index should also come up for you on your screens because we are seeing a lot of action within the broader markets. Mid-cap index down 0.5%, and the small-cap index is down nearly 1% in trade today. So yes, another weak day for Indian equity markets, especially after the kind of volatility that we have seen over the last few trading sessions on the back of West Asia crisis that seems to be accelerating going forward. But let's put the spotlight on the DISCOMs then, on the power sector then, and to discuss that in greater detail, we now have Neen Gopalakrishnan, Director at S&P Global Ratings, who is now joining us. Mr. Gopalakrishnan, afternoon, Ashesha this side, and thank you for taking your time out and joining us here on ET Now. I was just going through your report, and the crux of your report suggests that India's state distribution companies are heavily reliant on government subsidies and that their credit profiles would remain stable only as long as they receive their subsidies. Can you elaborate on this further and what viewers should gather from the latest report that you have released?
Yeah. Hi, Ashisha, and thanks for having me on your show. On the issue of DISCOMs, I think firstly, we do recognize that DISCOMs have made significant progress, both financially and operationally. However, our point was that if you dig a little deeper, most of the improvements in profitability have actually been fiscally supported, as in subsidies from state governments to the DISCOMs. That by itself is not negative on its own, but the point we have made is the subsidies that state governments have provided to the DISCOMs has actually steadily risen as a percentage of the total revenues of the respective state governments. And given that states have constraints as well to the extent to which they can fiscally support DISCOMs, there are risks if the situation is not structurally improved. And our argument is that subsidies have helped to a significant extent in removing the weaknesses that previously existed. But to make them even more structurally sustainable, we need more reforms and structural changes on the regulatory side.
We need more reforms on the regulatory side, and we will talk about that, Mr. Gopalakrishnan, in just a bit. But before that, since we are talking about state governments and the fact that they're giving a lot of subsidies and these state power companies are heavily reliant on that, first, let's break it down into two parts. One, how do you assess the quality of state governments in that case? Because you have said that the quality of state governments is weak. What makes you believe this, and which state governments are more, weaker as compared to other states?
Right. So the credit quality of the state governments varies quite widely. A previous study by the sovereign team within S&P Global showed that there is a dispersion in the ratings all the way from BBB, which is the same level as the Indian sovereign, down to single B. So state to state, there is a big difference in the credit quality. What I would also like to point out is if you look at the dispersion of the credit estimates that we have on the various states, there is probably a little bit of bias towards the lower end of the rating spectrum, as in almost 50% of the states are, analysts believe, are rated in the low BB or single B category, which is where the fiscal pressures and risks around to what extent they could continue supporting the DISCOMs arise. It's given this background that we think for a structural solution which is sustainable in the long term, there needs to be more reforms and improvements which are operationally driven rather than from fiscal support from the state governments.
And you've also said that if subsidies were excluded, most discoms would still report EBITDA losses. What, in your view, is the roadmap to make discoms financially self-sustaining, and how can they become financially sustainable?
Right. So the fact that at the EBITDA level, there would be losses if there were no subsidies shouldn't come as a big surprise because, as we know, in many states, uh, power is subsidized to the end customer, and the biggest subsidies are to the agricultural sector. And in many states, for political reasons, even to the retail consumers, there are various levels of subsidies. Now, this is fine as long as the subsidies take care of the difference between the price that is charged to the end consumer and the cost at which the discoms purchase this power. Uh, so what we've noticed is that the difference has, again, in technical terms, we call it the cost of supply minus the average revenue realized by the discom. And this differential, again, varies very widely among states. And in states where either there are free power schemes or subsidies to the agricultural sector are higher, you see a bigger gap. Now, to your question on what needs to be done, obviously, you need a tariff which is reflective as much as possible as the cost. And if there is a differential, it needs to be adequately small that it can be compensated by subsidies. Because what we have also pointed out in our research is many of these discoms